Good day. This video is about tax administration. It's an attachment. It was an attachment to hearings in March, and it's an attachment to the taxpayer advocate testimony for the 8th of February, 2022. So before the Ways and Means Committee. So and this will be added as an attachment to that to those comments for the record. Hopefully this can be posted as well on the page for the hearing on the web. So this is tax administration shifting to a single system for all business taxation, particularly enacting invoice value-added taxes to collect revenue and employer-based subtraction value-added taxes to distribute benefits to workers will end the need for filing for most people. You know, if you shift revenue collection to consumption taxes, whether they're paid by employers or they're paid by consumers, or both, I prefer both, I counsel both. The vast majority of people will have to pay taxes. Maybe nobody will have to pay taxes. Any remaining high salary surtax would be free of any deductions and credits, and could easily be collected by enacting higher tiers to the subtraction VAT. The only exception would be those very, very high incomes, or at least the top 1% of incomes, which instead of who could pay that would pay would still file. They would still file an income tax, again with no benefits, but the first big hunk of higher wage taxation would still be paid, could be paid through employers, as Lawrence B. Lindsay counseled years ago in his testimony on this topic. So I agree with Lawrence on this. He called it a net business receipts tax. So the subtraction VAT collection will closely duplicate the collection of payroll and income taxes, as well as employment taxes, because without having households having to file an annual, or it would be without annual filing a reconciliation. You know, if you separate out asset taxation and just tax salaries, it's cut and dried, and there is no reason for people to file on their wages. You know, all you'd have to do is verify the number of dependents who are claimed through a subtraction VAT. I talk about that in my attachments on tax reform. The child tax credit would, of course, come through employer taxes, the net business receipts tax or subtraction VAT, and then they would it would be included with wages and salaries, and for everybody, not just, you know, there'd be no cap, and there'd be no floor, and people who don't work will get it through their benefit programs. And educational programs, which everybody should be in. You know, if you're, and any other assistance program, you know, for those who are falling through the cracks, and UI too. But employers can distribute that with wages, take the IRS out of it. Like I said, tax reform simplifies it, and you know, forms will submit electronic receipts for invoice and any carbon tax and any subtraction VAT. A carbon added tax should be on a receipt, not just buried in the price, so that consumers can make a better choice. So, you know, when you get your fuel bill, your electric bill, or your gas bill, it'll say carbon units and what the carbon tax is on the receipt, or it'll be on the on the placard on the pump, that this much has been carbon taxed, and this is what the rate per ton of carbon is, so that people can make a decision. You put it on the charging station too, so you can compare what's the best for the environment if you're so inclined. And the only real verification would be making sure that the number of children you claim through your employer, that you don't have double claiming, so that both parents claim all the children, and so that that you make sure that the employers pay what they told the IRS they're paying. So taxpayers would say, okay, they say I got this, check their pay stubs, and the government says I got this, and if there's a difference, they call, or they're called, and they make arrangements for payment if somebody's overpaid. And states can collect. This is the beauty of it. States can audit too. So if the state government collects invoice VATs, carbon added taxes, and subtraction VATs, the IRS does not have to do that. And if companies do their own compliance audits, again, that saves tax administration at the federal level. Now, asset value added taxes would replace, as I say in my tax reform attachments, which again are linked to any testimony that has this. They would be collected on, instead of value added taxes or dividend taxes or interest taxes or capital gains taxes when you sell a house. Certain taxes and rent taxes. Certain taxes, taxes on real property would be collected by the states, and on liquid assets would be collected by the feds on each transaction at a single rate, and brokers would then send it to or banks, financial institutions would then send the money to the SEC, who would then send it to the IRS and use it to either pay down the debt or pay for overseas military adventures that favor large multinational companies. Let us not kid ourselves about our foreign policy. So it helps the rich should pay it. This ends the complexity. If you the tax units under $85,000 wouldn't pay wouldn't pay high salary returns, and in fact, the latest plan has $250,000 as the limit to a higher surtax, or a surtax on the subtraction VAT, and again, if somebody is paying a personal income tax on their higher salaries, again, the asset VAT would take care of all the capital spending. It would just be assets, and for some people that's not even very much if they're very rich, because at least if they're in the top 0.1%, the vast majority of their income is assets, and it's the higher you go, the more assets you pay, unless you're a celebrity, whether it's a celebrity CEO, football, baseball, basketball player, hockey player, or a recording artist, an actor. They pay high salaries because they have high salaries because they're famous and they get money from all the fans and and all the company, the whole conglomerate. So they would pay higher salary taxes, but that's the top. That's the billionaire and multimillionaire category. That's the top 0.001% of tax filers. The top 1,000 households or 1,500 households. Below that, it's mostly income. or mostly asset tax payments. So, but for those who who still pay income taxes, they should have the ability to buy a tax prepayment bond, and those monies would then go to the Bureau of the Public Debt, not the IRS, because they would buy the bond. And often if they have bonds, they can say, change these to expiring tax prepayment bonds, and you can stop paying interest on the debt. If somebody with an employment contract that's huge, they prepay their multi-year taxes. They have their contract and they know what they're going to make for 5 years as CEO. They can prepay the taxes. Nobody pays the interest. And if they've got investments that have treasury bills, bonds, and securities as part of that investment, they simply change that investment from federal debt, where they're getting interest, to tax prepayment. The interest isn't paid, and the debt goes down rapidly. And with asset VATs, especially if you have an asset VAT where it's not only ESOP, that ESOP exclusions for capital gains taxes would also, instead of just privately held share companies, you would also have that for publicly held companies. If you sell to an ESOP, you don't pay taxes. If you're an heir and you're getting out of the family business, you get a 28% tax break or a 26% tax break by not, you get that more money. That's an incentive to get rid of fortunes with, and people who, with the asset taxes I discussed in the other video. If you, if you're not going to be an active participant in running the business, the Ford family is active. A lot of heirs are not. They don't want to be in the family business. Farmers should be able to keep, not paying inheritance tax, and nobody should pay an inheritance tax on money, because any consumption tax will get that money in enough volume that you don't need any kind of death tax. But if you're selling the asset, it's marked to market when you sell it, or after it's inherited or gifted or donated to places like the Tax Policy Center or the Guggenheim or whatever. If it's sold to an ESOP, it gives more money to the ESOP sector and deleverages the stock market to an extent, and retirement funds and power over workers. Yes, I'm the IRS is best abolished with socialism. That's the thing. Who would think that it's a different cooperative socialism, corporatism, libertarian socialism? It's all the same thing. It really is. Everybody in that part of the world agrees with what should be done as far as employee empowerment. Some of us propose better cash and prizes, but essentially it's a more equal society, whether you're in the Rand Paul Club or the Bernie Sanders Club. Although Bernie's not really a socialist, he's a social democrat instead. But do this, and asset value added taxes and tax prepayment bonds, will cut the IRS workload, and that's what people seem to want. So this is how you do it with tax reform. Thank you very much for your time.